Consumer sentiment hasn't just dipped, it has collapsed across every income group and political affiliation. When every line on the chart points down at once, you better believe it means something. Stay tuned, because this kind of shift is the kind that the Fed can't afford to ignore. How do you feel about the economy right now? Are prices strangling you? Do you look at your job prospects or your recent college grad adult children's job prospects and find yourself wondering if the coming year is going to be as good as the last? Are you thinking about that YOLO trip to Greece, or are you quietly shifting from wanna-haves to gotta-haves? Well, these are very real questions, because what you choose to buy in the next year will shape nearly 70% of the entire US economy. That's not a typo. You, the consumer, are the economic power position. And my longtime followers know exactly where I'm going with this. Look, it's my job to put the right information in your hands so you can make smart decisions. Sure, I talk about earnings and data releases, and sometimes about random things that turn out to matter more than you expect. But let's get one thing straight up front. A solid economy is the foundation for your portfolio. Full stop. I don't care what stock, metal, ETF, crazy crypto, or options contract you own. If the economy cracks, your wealth erodes. Maybe not evenly, but it erodes. The economy is the ocean, and your portfolio is just a ship riding the tide. When that tide ebbs, your shiniest ship ebbs along with it. So yes, we want a stable economy, and I hope I've driven that point home. Okay, back to consumption now. I say this often because it needs to be baked into your investing brain. Consumption is critical because it makes up more than 2/3 of GDP. And my famous line, t-shirts are coming, don't worry, confident consumers consume. So, are you a confident consumer? Well, the University of Michigan sent us a pretty clear message on Friday. Their final November sentiment index dropped from 53.6 to 51. And if you look at the chart, you'll see what I see. A year-to-date decline that's not subtle, not noisy, not confusing. It's sharp, it's clear. In fact, it's the lowest since June of 2022. Guys, this survey is not a little snap poll. They survey 1,129 households every month, asking 5 core questions about present conditions and future expectations. They turn those responses into what's called a diffusion reading index, which is just a fancy way of saying how many people feel positive minus how many people feel negative. Then they roll it all into their headline index, and the result is screaming at us. When you look at the current conditions index, which tracks how people feel right now about their finances and whether it's a good time to buy big ticket items, you see something historic, 51.1, the lowest reading in the entire history of the series, lower than 2008, lower than the pandemic crash, lower than the 22 rate hike shock. Does that spell disaster? Well, maybe not, but it does spell something. Look, a lot of economists like to wave this away as soft data. They argue that people lie. They argue that politics distorts the readings. And yes, politics do matter. Democrats feel better when their guy is in the White House, and Republicans feel better when their guy is in the White House. We have the chart to prove it. Check it out. But here's the part you need to stare at. Every group is losing confidence together. Republicans, Democrats, and independents. They're all moving in the same direction, and it's pretty much straight down. And that's a warning sign. So let me give you one more piece of that survey that matters even more. I've written a lot about the K-shaped economy, and earnings this past season from the banks to Walmart pounded home the same point. Lower income Americans are struggling, and the data proves it. When you look at sentiment split by income, those earning below 75K are at 45.3, also a record low. And interestingly, from late 2021 to 23, higher and lower earners were basically tracking each other. And that most likely reflected the wealth effect hitting higher earnings hard when markets struggled. But now the gap is back and lower income confidence is cratering. So let's zoom out a little bit. These are not just pretty Bloomberg charts, they're signposts. When you look at them together, the story's not subtle. Sentiment isn't drifting lower, it's collapsed. It's broken through the historic floors across income groups, political parties, and across every single question the survey asks. And here's the part that naysayers can't ignore. When sentiment falls like this, it eventually shows up in the hard data because feelings drive your behavior. You don't book a vacation, buy a car, renovate a kitchen, or even buy a gargantuan Costco bottle of olive oil when you feel unsure about your future. And when tens of millions of households feel the same way at once, well, the economy slows. Retail sales cool, credit card stress rises, and guess what follows? GDP. And that brings me to the Fed. Look, I'm not here to predict doom because that's not my brand, but I'm here to say that when consumer sentiment across all groups flashes red, the Federal Reserve should take note. You cannot claim to promote maximum employment and stable prices while households are telling you that they feel uneasy, uncertain, and increasingly squeezed. These readings matter, and they matter right now. The good news is sentiment can bounce quickly. It can recover when uncertainty eases, when inflation cools, or when markets calm, or even when policy stabilizes. There's plenty of room for improvement. But that doesn't mean you let your guard down. Not now. Not with readings at record lows. This is the time to be focused, nimble, and honest, and more importantly, most importantly, fact-driven. Listen to what households are saying. So your truth bomb for today is this. When every group loses confidence together, the signal is real, and the Fed, they better be listening. Join me every day for Wall Street Truth Bombs, where I drop them here before the market figures them out.